Hello everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Talking Points for the week ending March 4th, 2022. Let's get into stocks. Market equity indices across the globe dropped last week with the S&P down 1.24%. The Russell 2000 was down 1.92% and the NASDAQ was down 2.76%. We're seeing probably anywhere between 5 to 15% down this year so far. Still a lot of volatility in the market as we're going to continue to talk about. International markets were most affected by the war in Ukraine, with the developed markets primarily consisting of Europe down 6.5%. Emerging markets were down 2.29%. Again, value outperformed growth in the U.S. We've been talking about how we've actually pulled a lot of stuff back over to domestic, and we don't see a lot of going over to international. And it's good timing that we pretty much stayed out of that. Energy and utilities were the best performing sectors, while financial and technologies were the worst performing. Fixed income, the interest rates declined and bond prices rose. So the benchmark 10-year Treasury fell 23 basis points to 1.74, and that actually has been going up all year. It was about 2%, and now it's down to 1.74. The yield curve flattened as the rates on longer maturities fell more than 2-year Treasury. So year to date, the curve has flattened. The spread between the 2-year and the 10-year has narrowed 79 points to 24 points. So commodities, the 31 member countries of the International Energy Agency agreed to release 60 million barrels of oil from their emergency reserve in a move to send unified and strong message to global markets that there will be no shortfall of supplies as a result of the Russian invasion on the Ukraine. But if you think about that, that's only 0.6% of one day's worth of oil needs. So it really is almost like not even a Band-Aid on the supply. And that doesn't help. So as a result, OPEC met midweek. They agreed to make no production changes in their plans. So the price of West Texas crude ended up the week at $115 per barrel, up 26.3%. As you see it at the pumps right now at $4.25 per gallon. So as you see, we are very high with oil right now and gas prices. So let's talk about gold, which is an endowment series and precious metal strategy. Saw prices rise again last week to nearly $2,000 per troy ounce as investors sought a safe haven in times of crisis. This occurred along with increases in the price of other precious metals that are up more dependent on Russian sources. Year to date, gold is up 7.38%. Economic data, non-farm payrolls rose 678,000, well ahead of consensus expectations, for a gain of approximately 440,000. This increase was led by the leisure and hospitality sector. With that, the unemployment rate dropped to 3.8% from 4%. Also noted that the average hourly earnings rose 5.1% on a year-over-year basis, which is kind of what we've been saying is actually the country is still in expansion right now. We've got a strong economy, but all this volatility going around the world and the inflation is actually causing the market to go down right now. So let's talk about company news. Booz Allen Hamilton Holding, which is a Core Select G33 and G50 in our portfolios, rose 13% last week as the consulting group to the military is viewed as a primary beneficiary to increased defense spending. Chevron, which is also in the G50 and Core Select, rose 13% last week due to reduced supplies and higher gas prices. L3 Harris Technologies, which is a G50 holding, rose 14.3% last week. This provider of aerospace and defense tech solutions to government is viewed as a major beneficiary of additional spending for global defense as well. So that's it for the week. Remember, we have to stay allocated. We don't want to make knee-jerk reactions. We know that we're going to have volatility. We're already down. We might go down further, but we know when we try to market time, we're going to miss a lot of the upside. So as long as we're properly allocated, we're going to be okay. That's it for this week. Thank you for being part of our ARA family. If you need to contact us, of course, 855-756-5700. Visit us at aradvisorsinc.com. Visit our Facebook and YouTube pages and scan the QR code at the end of this video to subscribe to our newsletter if you're not already getting it. And that's it. God bless you, and we'll see you again next week.